real conversation here.
Sounds good to me.
Ethan, we are live, man.
Outstanding. I look forward to everybody dialing in and getting this conversation underway.
Let me, before we get into the topic at hand, let me just check something out here on my LinkedIn feed, make sure everything's flowing okay.
I did my part, Brian. I reposted it this morning, so I hope
I saw that.
some of the people watching are people that were following me.
I saw that, and I appreciate that. Mute that. Okay. All right. Well, Ethan, thanks for joining. And everybody, welcome to a special live edition of Mortgages and More. We are talking today with Ethan Saxon, Vice President of Legislative Affairs at the Mortgage Bankers Association. Ethan, thanks again for joining here this morning. I know we were supposed to have the esteemed Pete Mills join us, but he had something come up that took him away from us this morning. But welcome.
Sure. Thank you, Brian. Great to be with you and everyone who's listening in. Really appreciate what you're doing on this platform, and I'll be more than happy to gab for two because Pete is out. So look forward to diving in on. Yeah.
We're gonna cover a lot of ground here. So the I titled this event Credit Triggers, the View, not VIEAUX, the View, VIEW from DC and the MBA. And how lucky to have this conversation here on Monday morning, the day that the National Advocacy Conference, also known as NAC, kicks off in Washington, D.C. And I know you're all dressed up for the event and heading there right after we're done with this talk. But I'm excited about all the mortgage bankers that are coming to DC to do great work on all of our behalf, and we're going to get into that a little bit.
I just quickly say, Brian, absolutely, this is really the highlight of my lobbying year, when I'm joined by all our grassroots activists and members to come and do what I do on a daily basis, the shoe leather lobbying, going up to the Hill, talking with members of Congress about housing finance, and talk about a force multiplier when you have a conference of 400 people showing up to do exactly that. It's great for the industry and it's good for them.
So I'm going to be manning our comments that come in. So for the audience, if you have questions, comments, I've seen a few thumbs up. Appreciate those. You can drop them into the comments, and we'll do our best to address those as they come up. So Ethan, let's talk a little bit about you and your background. You're a lobbyist. You're a lobbyist for the mortgage bankers in the mortgage banking industry through the MBA. So tell us what that means to begin, and then we'll get into the real credit trigger topic here in a minute.
Sure. So one of the things I've loved about working and representing in this space is I get to hear people's stories about how they came to housing finance and working in the mortgage industry. No two stories are alike. My path to this work is coming from the Senate. I worked as a senior advisor for Senator Blumenthal, Connecticut senator, and I'm tasked. I'm kind of like one of the four horsemen of the MBA lobby shop to be the Senate Democratic lobbyist, to use my understanding and connections in that quadrant to advance our issues. So there are more of me, but I'm the Senate Dem lobbyist for MBA. And a trade association is a really kind of unique way to engage on lobbying, where we're not representing any one individual member or company, but really the views of a broad industry and a very diverse industry with a lot of different channels and ways that people participate in housing finance. So I've learned a lot through this experience. I've been here about a little more than 4 years, and so seen kind of volumes up, volumes down, people responding to the economy in different ways, and throughout that had this constant conversation and engagement with the Hill about how our industry is doing.
Love it. It's never a dull moment, right?
Indeed.
And so what brings us here together is this this topic around credit trigger leads. And so this audience, I think, really understands what credit trigger leads are, but there may be a few people that are tuning in that have a little bit less of an understanding. So just to frame it for the viewers and the audience, the current policy under the Fair Credit Reporting Act permits the credit reporting agencies to sell consumer information without consumers' consent or knowledge. And then that, in effect, is one of those pieces of consumer information is when a consumer applies for financing and a credit inquiry is made. And typically it's a hard credit inquiry versus a soft credit inquiry. So that's the current framework that we operating under, which is, the ability for the bureaus, in essence, to make this data available to third parties who can acquire the data, oftentimes for a fee, probably the vast majority of the time for a fee. And what we've seen, over the last couple of years is really a misuse by third parties, some third parties. I want to make sure and say that it's not every third party, but misuse by some third parties with this information, which is resulting in borrowers who've applied for financing being, having their phones blown up with hundreds of texts and phone calls and voicemails. So let's frame up the issue, and I'll let you kind of weigh in on that before we move to the next part of this conversation.
Yeah, I think a good place to start with all of this is defining the problem. And the current authorization for use of trigger lead is predicated on, one, the consumer's consent permission, or the provision of a genuine offer of credit. And I think that's the real weakness in the present system, in that these offers may not well meet that standard. And how do you ensure that that's actually what's going on in the marketplace, that somebody's getting a genuine offer of credit? And as I've come to this issue, there's so many things that I work on that are from kind of the consumer side alone, or maybe the lender side alone, or maybe they come in from a tax conversation, because from a company perspective. What's amazing here is we're at the intersection of all of these three concerns. Everybody says what's going on right now with trigger leads ain't working. People might have different solutions on what to do about it, but it's really unique in my lobbying experience to come across something where everyone's like, no, this ain't right. We got to get something done here.
Right. Then that's been the most interesting thing from my seat. I've got 3 decades of experience in the industry, and the last 12 plus months, this issue has really just been amplified within the industry from multiple streams, if you will. And so
I tell you, Brian, my learning curve on this, I've really appreciated the loan officers who've sent us, forward us email chains and stories. Obviously, we keep the names private and what have you, but the stories of loan officers who said, I was helping somebody with their home purchase. It might be their first time through this. And then, seconds after we were done, their phone blew up with offers, emails coming through, texts. And I have these, lists of the borrower responding to the loan officer as if they had done something to put them in this predicament, that they were the ones that sold their information. Why did you do this to me? We were getting along so good. You were really helping me. And then boom. And this kind of landmine goes off in what should be a kind of glide path to closing a home loan suddenly becomes really disruptive. So that background that we've gotten has really proved invaluable in informing the Hill about this issue and framing it as, look, this is something the lenders are concerned about, the loan officers, and really from the bottom up, it's the people who are doing the work issuing the loans that are saying this needs to change.
Well, and I think to your point, it's not just, because one could argue that, loan officers and lenders, of course, they have a vested interest in this issue because it's a risk, potential risk to business that they're doing. But based on what you described, and I've seen dozens, if not hundreds of the same examples, it's really coming from the consumers who are reaching back out to the trusted, originator that they've been working with. And so I have to imagine that that's extremely powerful for, our legislators to see consumers, having very strong thoughts and opinions on what's going on here.
Yeah, they are dealing with an anachronistic system that was framed around the idea of you getting a letter in the mail. that,
Right.
you would have the credit inquiry, and then somebody would have a competing genuine offer that they would send you a letter on.
Yeah.
That is not what is happening. And when you have these kinds of challenges, your starting point is, all right, well, what's the quickest kind of path of least resistance solution to try and tighten this up and make the way this is used in practice reflect the way that the regulations are written. And, you can have, as a trade association, we convene groups of members to get together to talk about problems and say, what is we as an industry can do as a standard. We talk to regulators all the time. We send them detailed, copious letters on behalf of the industry to say, how do you fix something? But the final backstop is, all right, well, we've got to go to Congress to fix this, because that may not be a quick solution, but it is a comprehensive solution.
For sure. So that's a good segue into HR 7297, which is the Home Buyers Privacy Protection Act. I'm sure it's going to be called HPPA soon enough.
Everything has to have an acronym in DC, yes.
So before we dive into the act itself, and I'm gonna be dropping some links into the comments here for folks. I just put a link in the comments to a survey that I did about 2 weeks ago to my LinkedIn following, and I asked, what is your opinion on credit trigger leads? Do they offer genuine value to a consumer who has applied for a loan with an originator? That was my question on the poll. The resounding response was no, only benefits lenders. That was 60%. Only 4% said yes, good for shopping options for consumers.
Okay.
And then about 30%, just under 30%, answered depends, content, and execution. So basically, there may be certain instances where where credit trigger leads make sense. And so with that, let's get into HR 7297. Why don't you just take us through what's going on there?
Yeah, well, I think your polling kind of frames the issue well, in that there's a general kind of appreciation that the methodology and the way credit triggers are used isn't working, but then there is also some kind of understanding that, well, if you did it the right way, or if we change this or that. What we are very focused on is, like, when we do legislation, first, do no harm. So what we were thinking about is, well, what are the genuine and appropriate uses of a trigger lead? And it's kind of maybe putting the conversation on its head or upside down, given how we were saying, well, they're abusive and we want to end these abusive practices. But the real starting point is to say, well, what are the genuine uses of a trigger lead? And so when the legislation came together, if you're talking about the substance of it, we built it around this consensus of keeping certain elements of a trigger lead that our members, again, sourcing from these conversations of companies and individuals who are MBA members, to really understand that there's a genuine use for a trigger lead when you're servicing a loan portfolio. You do want to know if one of the loans is going to be repaid earlier, and managing that mortgage servicing piece. That's a genuine use of a trigger lead, no question. You do have kind of a need for a trigger lead, or a genuine, when you are the originator of a loan. If you are the person who originated the loan that is being refinanced, you clearly have a relationship with the borrower, and they've trusted you to initiate the loan that they have, and that may well be a genuine use of a trigger lead for future needs. So we didn't want to have, as our starting basis of the industry, trigger leads are banned, period. We thought that would really not address what we wanted to focus on, which was this issue of abusiveness, when customers are unhappy and loan officers are unhappy. And the way that you can target that is you need some deterrence and accountability in the system, and transparency, so that the borrower knows why it is that they're getting a trigger lead, because we've shrunk the world of possible cases that this could occur. And the lenders can continue to use them on the basis of having a genuine offer of credit and a real relationship, so that there's some deterrence in the system, a feedback, if you will, that if you want to go ahead and bury a borrower in 100 spam texts and phone calls, they will never work with you again. But they will know that that's not the person they initiated the loan who's doing that. It's coming from another company or source. So that won't be able to continue that relationship. So we worked very carefully on the exceptions first, if you will, to preserve what we thought were genuine needs for a trigger lead and a deterrence where if you abuse that relationship in any way, you would be cut off. And then above that line, we said, that's unless the consumer gives permission, there's no other reasons for a trigger lead. End of story.
So let's dissect that just a little bit. I think I understand really well the use case from a servicer perspective. Mm-hmm. And it could get a little dicey, I guess, from an originator perspective, especially when a loan originates with, ABC mortgage company and then is either brokered to or sold to, in the secondary market to XYZ mortgage company, who then may or may not be the servicer on that same transaction. What kind of thought have you had in kind of bifurcating the chain of a mortgage as it moves through the secondary system?
Yeah, well, I think we're focused on maintaining the relationships between the entity that's servicing your loan, which borrowers generally have a good sense of. As we saw during COVID, the servicers did a great job of helping people with their relief options. And we did a trade association campaign about call your servicer. That's step one.
Right.
And then lenders who initiate the loan, originate the loan, also have done the work of finding a customer and helping them through the home purchasing process. So those are two relationships we wanted to kind of continue to have a genuine need and relationship on trigger leads. And also, if you have a depository relationship, so if you have, say, a checking or banking account and you use that company for those services, it's also a very strong deterrent against abuse of a trigger lead, because you can say, I'm closing my checking account, see you later. So right. Those are the kinds of thoughts that we put into crafting these very narrow exceptions, with the overall emphasis on taking any objection to moving ahead on trigger leads being kind of from an abusive perspective shut down, and taking those few exceptions off the table by crafting the bill. And we really were guided in kind of coming to that kind of Goldilocks solution, if you will, both by the grassroots input of the Tennessee Mortgage Bankers Association that worked with Congressman John Rose initially, and we can build that relationship and educated him about why this is such an industry concern. And then working with our members to kind of craft exactly the right language to solve this problem.
So in support of that, just recently, I think it was last week, maybe the week before, the MBA led a coalition letter, right? So it was not just the Mortgage Bankers Association that was part of this. It was, I think, a total of 23 organizations and lenders included. So you really got as many interested parties together on this letter as possible. Can you talk a little bit about that process and then what that letter sought to do?
Well, I appreciate you referencing that letter. It was a lot of work on our part, but really an effort to convene and bring together all the different associations and companies that have said we're interested in enhancing consumer privacy. We're interested in having a better home buying experience. A lot of the folks that signed that letter are groups that work on helping homeowners, and we shouldn't put kind of a stumbling block in front of the blind. That's a expression. We shouldn't make additional challenges and barriers in what is already a complicated process. So a lot of people came to signing that letter from that perspective. And what we wanted to show is that I think overall housing legislation in Congress, there's a lot of impasse and disagreement. And we wanted to show this is not that. This is an area where, regardless of your views on the left or the right, or on home ownership supply, or on consumer issues, we all come together to say this is important and can be done, quite frankly. It's not only something that should be done, it's something that could be done were Congress to move on the legislation. So having everyone on the same letter where we all agree to the content and we all sign our name at the bottom is a real powerful show of force. And we were able to have Senator Reid put that letter into the hearing record. The Senate Banking Committee had a hearing on housing legislation, and he said, here's all the groups that are with me and Senator Hagerty, a great bipartisan bicameral bill we have here, that are all on the same page on this. the fact that we have those two proponents in the Senate that may not agree on anything else coming together to say this is the housing bill that we can work on and think should be passed, I think that's really significant.
And I added a link to the mortgage bankers website where that letter is in the resource area. So I think it's a powerful, it's a visual that I think everybody needs to see and understand, that it's not just, the letter didn't just come from one, association. It was multiple trade associations, but it also included lenders, some large lenders and some smaller lenders alike.
Yeah, and I think that's a really important aspect of this too, is that we are seeing lenders come forward who often may not want to be front and center on legislation and policy and lobbying because they're busy serving clients and customers, to say, no, this is something we care deeply about. We'll put our name out there to say we're for ending abusive trigger leads, do this. And I appreciate all the support that we've been able to show, that it's a good for business and good for the consumer at the same time.
So I'll just drop National Mortgage Professional. I'm reading their article, so it's not me just pulling names out of a hat. The letter included, obviously, it was led by the Mortgage Bankers Association, included the Broker Action Coalition back. It included the National Association of Mortgage Brokers, the Association of Independent Mortgage Experts, NAR, right? National Association of Realtors, yes. National Association of Home Builders, and then there was multiple lenders, but a few that are named: Rocket, Guild Mortgage, Equity Prime Mortgage, to name a few. So again, you can see the expansive inclusion in this letter, in this coalition. So I think it's a very, it's a great representation of our industry, and not just the mortgage side of the industry. It's new construction, it's real estate, et cetera.
Yeah, and I think you can see that because of that support, we're breaking through. We have 13 co-sponsors in the Senate right now, and I think Senator Rounds was the most recent senator to add his name to the legislation. And we're also breaking through in the sense that, when you have 22, 23 trade associations and companies saying this is the right solution, what we didn't want to have in this case was 3 or 4 competing bills, none of which had a viable path. And what we were able to do was build consensus that this is the right thing to do with this text and doing it this way. So that's what that letter represents.
So good segue. We got a comment from Chuck Nance, probably the $1 million question, right? And frankly, this will lead us into the next part of the question or conversation, which is the National Advocacy Conference. So Chuck asked, do you see Congress realistically resolving this issue during an election year?
Well, Chuck, it's a great question, given that the likelihood of Congress doing anything about anything right now is extraordinarily low. We are yet again on another government shutdown cliff, possibly Friday. So just the fundamentals of keeping the government open and keeping the lights on have been something that this Congress has really struggled with. So I'm mindful of that as kind of the base case of nothing getting done about anything. We've got major issues like flood insurance needs to be extended. There's all sorts of other things out there that they must do. So to bring another thing that they don't have to do and say, this is what you should get done, it is a challenge from the get-go. But here's why I'm kind of optimistic, that I think our fate is very much in our own hands, that to the extent that the industry gets behind this and pushes this as something that should be done, I think that will help determine our fate if we are all of one voice advocating for this. And I think we have a couple of things going in our favor. One, this is legislation that doesn't score. We don't have to come up with millions of dollars to pay for it. 2, it's bipartisan, bicameral. Like I've said at the onset, people have come together that might not agree about anything else and say, do this. And 3 is there is a real, genuine, pressing need for housing legislation to pass this Congress. In addition to this bill, crucial issues of housing supply, of investing in affordable housing that they need to look at. And so there is a path, whether we succeed or not, but there really is a path of putting this together with some of the other issues that need to get done in the housing space and finding its way through this year. And you can be sure that we're going to give it all we got to, find that opportunity, seize that moment to put this forward.
Awesome segue into what's scrolling at the bottom of our screen, the Mortgage Action Alliance, also known as MA. And I also put a link to Ma in the comments. So let's talk a little bit about how important it is for each of us in the industry to have a voice. And the Mortgage Action Alliance is a mechanism to allow each of us to have that voice. Can you just share a little bit about Mortgage Action Alliance?
This is the platform that we provide for you to contact your legislator on housing finance related legislation. So obviously we're engaged right now on this, but we also have other topics on affordable housing, on veterans issues. If you go there, you can see, hey, I want to support the industry and be a voice, and you can just click there, enter your zip code, because everything is done based upon where you live, and we have it all ready to go for you. So it is a great platform for you to use if your company is an MBA member, and a way to, I know from having been a congressional staffer that legislators actually care about what people reach out to them about. Those letters have to be answered and responded to. So it is a way for you to have an impact on legislation and policy. And in this particular case, we've seen a really strong response of people weighing in, which often, I think people sometimes are hesitant to lobby or advocate for themselves, but here's a chance for you to say, I'm going to do something for my customers. And also the next time somebody complains to me about a trigger lead situation, I can say, well, you know what? I've actually done something about that. I was on the Mortgage Action Alliance platform. I sent a letter. I'm with you on this, instead of it being kind of an adversarial conversation or having to explain away. No, that's not me that's causing you a problem. You've acted. So it's really great from that perspective as well.
Yeah, I love that. I've been on there, and it's so easy to fire off your letter, right? You guys have created the template, and to your point, once you're logged in, you have your zip, you're going to get the letter going to the appropriate representative for you where you live. And it's not just this particular issue that we're advocating for. There's plenty others that are important for our industry and the consumers we serve. And so we strongly encourage everybody this
is definitely issue number one right now, as far as something we think, like I said, should be done and could be done. And there's think of it as levels of effort here. The least level of effort is to go to MA, click a button, and say, hey, we can all do it. Anyone who's figured out how to join this live broadcast can figure out how to do MA. The next level of effort, so much of life is about showing up. And what we are doing right now, I think, as you said at the beginning, is our advocacy conference. So we are going to be having 400 MBA members from across the country on Wednesday go in and have one-on-one, face-to-face meetings. And this will be issue one, when we obviously start our conversations by saying who we are, what the state of the housing finance industry is. But then when we turn to, all right, what can Congress do to help lenders, to help homeowners on their path? This is it. So we're going to be making the case directly to Congress come Wednesday on this legislation.
So that's huge. Wednesday, the mortgage industry takes to the hill, right? That's the annual advocacy conference event. But maybe share a little bit about what happens between now and Wednesday, specifically tomorrow. Tomorrow is the day that these 400 mortgage professionals get fully educated and up to speed so that they can be effective and efficient and well-versed on the topics that they're going to be sharing and talking to their representatives about.
Yeah, hopefully some of the folks dialing in and listening have participated in MBA conferences and events, and we bring really amazing speakers. Yes, NAC has all that, but it also has this kind of pathway to prepare you for your Hill conversations. So what we really take the time to do on Tuesday is do information sessions and issue briefings where we engage with everyone who's come to make them comfortable and prepared with the talking points, the facts, everything they need to go be an advocate so that they are the speaker on behalf of the industry. And that's what's great about this conference. All 400 attendants, they are the speakers. It's not so much who we've invited to be the keynote address or which senator or member of Congress is coming. Yes, we have plenty of those, but it really is about empowering the people to come to be ready to do those Hill appointments.
Yeah,
so that's all tomorrow. Yeah.
It's a powerful event. It's been a few years since I've been at the event. I definitely plan to attend next year. But again, I encourage everyone that's watching that is not already part of the Mortgage Action Alliance. That's your way, our way, for those that aren't attending in person to have our voice heard. And then I'm really looking forward to. I've got a conversation next Monday with Taylor Stork from the Community Home Lenders Association, and so I believe he's going to be in DC this week. I'm looking forward to getting his report out on how the week went as well.
Sure. Yeah, I think you'll get some good feedback from everybody that participates. It really does take a collective effort from everyone to, given, like I said, all the competing concerns in Congress, to say, let's do something about trigger leads. And that's what we are going to be on message come Wednesday, saying that it's time to act. Home Buyers Privacy Protection Act, ready to go, ready-made solution. Let's go fix this problem.
Love it. Thank you, Ethan, so much for the tireless work that you do and the MBA does on our behalf. And thank you for joining this morning for our live Mortgages and More podcast.
Thanks for having me on, Brian. All the best. Take care.
All right. See y'all. Thanks for coming in today, and we'll see you guys next week.